Welcome back to Bazaar Morning Call. Hope you're having a good morning. Just to apprise you, well, overnight the equity market was a little bit jittery. You had bond yields as well that moved up, a stronger dollar. And for starters, the gift nifty is indicating, well, we'll be down only around 10 points. To the other Asian markets, they're under some pressure. Plenty of stocks to discuss, though. We have Dipan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Dipan. Good morning. Thanks so much for joining in. Dipan, let's start with Titan. They came out with an update yesterday, and that update looked very, very good. I think for many, many years, we've been discussing this stock, Dipan. And valuation-wise, it's expensive, but it's likely to always remain expensive with these sort of numbers. Your view on the stock at around 3,000 rupees?
Nigel, good morning, and thank you for having me on your show. I think it's good for the valuation that the stock is reporting, the company is reporting these kind of numbers, because they certainly will justify the premium valuation that which the stock is trading at. But I think we need to take a little bit of pinch of salt because actual gold prices also have gone up. So in terms of grammage, in terms of volume, I think that is more important to judge than the actual revenues increases, because a lot of it is because of increase in gold prices. And I think this time's quarterly result will be very interesting because very good focus on two things. One is its operating profit margins in a high gold scenario. And second, of course, is its international operations, because that could be the new growth area for Titan. But at these valuations, I wouldn't want to make a fresh purchase. Existing investors, I think it's a no-brainer. You need to remain invested.
Dipan is still with us. Dipan, what do you make of this space? Clearly, there's a lot of interest out there. Some of these stocks have given big returns. How do you approach this theme? Would you look at a smaller player like PG Electroplast, or would you like to stay with the bigger names?
And Nigel, I think there's business for both the companies, and smaller player may perhaps benefit because of base effect, and we may get it a slightly cheaper valuation. But I think broadly from what I understood from the management is that it's a pretty de-risked business model with many products and many clients. And that's what I think is an important element in such OEM equipment manufacturing companies, because client concentration is a big risk factor. Product concentration also is a risk factor. And the fact that they are scaling up in different appliances, as well as electronic products, certainly augurs well. There's also the PLI opportunity, I'm sure, which the company is pursuing. So on the whole, I think very positive on a company like PG Electroplast. And the way Dixon has generated the kind of returns, I think you can expect similar growth and returns from PG Electroplast as well. That is at a huge discount to Dixon per se. And on the whole, I think, in the way the home sales are growing up and the entire consumption pattern way it's shifting, I think appliances, electronics, and related products have a great future.
Dipan, what have you made of Dabur's update? It looks pretty good. They're guiding for a consolidated revenue growth of more than about 10%. Their healthcare business has seen a double-digit growth. Home personal care, HPC, double-digit growth. Home care, high teens. Oral care, hair care, low double digits. Bacha masala is doing well with high teens growth. So it's pretty strong, a double-digit growth across all categories, whether it's high teens or low double digits. We're still looking at a strong double-digit growth. How do Dabur's, what have you made of these numbers? Because yesterday, Marico sounded a bit, downbeat.
Yeah, I think great numbers, great presentation coming in from Dabur per se. And they've been focusing on key brands, especially under the new CEO. And I think that's paying rich dividends for them. It's a competitive industry in which they're operating in. Some of the products are in mature category as well. And to generate double-digit type of volume growth is very impressive. I think after many quarters, we could see phenomenal numbers coming through from Dabur, not only because of higher revenues, but I think a lot of costs have come down for the company. A lot of it will get translated into higher operating profit margins. So although valuations are on the higher side, but at a discount to MNC, FMCG companies, but on the whole, I think it's got great prospects, and risk return profile certainly favors Dabur shareholders.
Risk return favors Dabur. Dipan, do stay on. Need to slip into a very short break. But
Dipan, what do you make of this one? KEC, it's done very well. We had the management who joined us yesterday as well, and they were sounding quite optimistic about the prospects. Your view on the stock at these prices?
I think it's fairly valued at these levels, and our preference would be for something like Apar Industries, which has a stellar growth track record and available at more reasonable valuations. And on the whole, I think we are seeing a beautiful rally play out in capital goods stocks on the back of sizable improvement in the external prospects of these companies. We are clearly seeing a capex cycle picking up, and companies like KEC International, Apar, Kalpataru, I think they are in for good tidings going ahead also. But as I said, I think a preference with usual disclosure is for a company like APAR, which has got a reasonably higher return on capital employed as compared to KEC and even Kalpataru. And the track record and the kind of prospects which they have, the export markets which they are able to tap is far better. So from that point of view, we have a special preference for that company rather than KEC International.
Dipan, what's the street pricing in terms of the value ascribed to the financial services business? Overnight, it got the NCLT approval for the demerger, so one step closer. What's the overall value that the street is looking at for the financial services business for Reliance?
See, I think 1.5 lakhs is what the kind of market capitalization expectation for Geofinance. And I think it'll get listed pretty soon. So we'll have more granular details about the operations of the company. But considering the track record of the Reliance Group and their passion for scale and aggression, I think it's going to be the stock to watch in the NBFC space. And, as a standalone entity with a very strong management and the kind of network effect in play because of the Reliance Group, it's one company, I think, which can certainly cause a lot of ripples in the NBFC space. And certainly, I think it will find itself in the portfolio of many investors. In any case, I think investors who are holding shares of Reliance Industries get shares of Reliance of Geofinance as well. From that point of view, it will have a pretty broad-based shareholding pattern as well.
Thank you very much for joining in. Yes.